Hi everybody, George Peacock here, founder of Fear-Free Investing and manager of the Purchasing Power Portfolios. After 25 years in the investment management business and the investment advisory business, there are really three things that you need to know about and you need to focus on to make sure you have an effective financial plan and investment strategy over time. So we've put together three brief and free videos for you to watch to find out more about these topics. The first one is investment-related costs and fees. The second one is about choosing a financial advisor or assessing the value of your current advisor. And the third one is about asset allocation practices today. Now let me go over a little thumbnail for each one of those. In the first one, investment fees and related costs. What we found is that most people don't know what they're paying. They don't know in some cases because it's a little convoluted, and in some cases because those charges are hidden, certainly at the portfolio level. And then at the advice level, many people know what they're paying in terms of a percentage of assets under management, but they don't really know what the magnitude of that fee is over time. So we'll talk to you about how to identify the various fees and costs that you're paying, show you the magnitude of those costs, and then most important, show you a few very simple steps you can take to lower those fees as much as possible and keep that money in your pocket. Let me give you one example. We had an investor come to us who had $250,000 that she'd saved and was going to be used and invested towards retirement, which was 25 years down the road. We identified the fee structure that she had and found out that she could save more than $1 million in investment-related fees and costs. Now, it may seem crazy to pay over $1 million in unnecessary fees and costs for a $250,000 portfolio, and it is. But many, many people are in that situation today just because they don't know what they're paying and how to lower it. So we'll show you in that video. In the other video, for those people who want to work with a financial advisor, and let me mention that we have other videos and DVDs that show you how to lay out an investment strategy and a financial plan that don't require working with an advisor. But if you do want to work with an advisor to have somebody to bounce ideas off of and talk to and have them research various financial planning topics, we'll give you a checklist that will help you find the right person to work with. A lot of checklists out there have some good questions, but they're missing some very important ones, so we add that to that. The other thing is we give you a different process for trying to find out who to work with. The process that most checklists and websites employ is too stressful for most people, and we find out that they don't do it. So our answer is both a process and a checklist. We also have a checklist that you can send to your existing advisor to get the answers to some questions so that you have a better idea of whether you should continue that partnership. And the third, and maybe one of the most important videos in this regard, is an update on the state of asset allocation today. Most people, most advisors, whether they're working for a large firm or a small firm, use what is called a means variance optimizer program. And that basically takes what your existing portfolio is, analyzes it, estimates what the expected return of that overall portfolio is, how much risk you would encounter along the way, and then maybe make some recommendations about portfolio B, how you might move your portfolio to either increase your return or reduce your risk or both. Now here's the problem. These programs are useless. They really depend so much on the inputs, and the inputs are literally unknowable. And the problem that we find is most of these programs, and the results are usually in a 50-page booklet, are shown to people in a way that we believe constitutes securities fraud. Not only are they definitionally wrong, but a lot of the information that should be told to you is omitted when they talk to you about it. So you don't really have the tools. You really don't have the ability to ask the right questions without that information. So we're going to tell you very briefly how those programs work, what questions you ought to be asking, and how they could be useful, but really they're not. So we're going to give you an alternative to using that as well. So those three videos are the videos we've put together for you: investment fees and costs, how to choose and assess the value of a financial advisor, and how not to be entrapped by today's current use of means variance optimizers as a means of coming up with an asset allocation. They failed in 2001 during the dot-com crash, they failed during 2008 during the most recent financial meltdown, and they will fail again because of the various things that we will tell you about. So go to YouTube, search for fearfreeinvesting.com, or better yet, go to fearfreeinvesting.com, which is fear-freeinvesting.com. And these three videos will help you put together a better portfolio, a better financial plan based on today's increasingly chaotic and interconnected global economy and markets. Thank you.